All right. Welcome to this section. So we're actually approaching the end of week one. All right. So it's we have been going so well. So I hope and I know that you have been watching the videos, paying attention, and taking your notes on the previous videos. You will make sure you take your notes. It's only good to help you and guide you in the future. So you don't come to this video all the time. You just go to your note, and then whenever you want to go through some things, or you can actually also teach other persons, right, using your notes, right? So that's the importance of taking notes, right? So I myself I have a note that I jot down everything I was taught by someone already as well, and I'm still a student. So it's the truth, I'm still a student, and I'm still learning. I'm growing as I'm growing. So that's it. I'm growing. So, guys, so on this very section, we're talking about the leverage, and then leverage allows traders to control their position with a smaller amount. So, like we said initially on previous video, so leverage is just a buying power, right? They are borrowing you, yeah, they are giving you money, right? They are borrowing you to trade. So now let's say, as for example, with a leverage ratio of 1:100, you can control a position of $100 with a margin requirement of just $1,000. So imagine you have $1,000, you can open up to one standard lot. You can see how awesome that is. Already we know that, okay, you if you have $1,000, you can open a whole lot of positions, right? You can open a whole lot of positions. So depending on the asset you are trading, if you are trading, let's say, depending on the pair you are trading, anyways. If not, I would have told you, okay, this is the lot size, this is the maximum lot size you can use. But then with this $1,000, you can almost pairs, not all, but on most pair you can open one standard lot. One standard lot, meaning it means that one standard lot means that on if it moves in your favor for one pip, you are going to make $10 if you use one standard lot. And if it moves against you for one pip, you are going to lose $10. That's it. So the higher the leverage, or the higher the lot size, the higher the profit, and then the higher the risk as well. So now the leverage, what leverage help you to do? Leverage is very important. Please, it's very important. Don't underestimate it. Because let's say you have a small account and you are trying to flip it. You actually need a high leverage. Personally, I use 1:5,000 sometimes, 1:2,000, 1:, so that even with my small account, I can still open big position. But of course, you know that I'm exposing myself to higher risk, right? To risk, higher risk. So that's it. That's it. So the higher the risk, the higher the returns. That's just it. So now, so you have a $1,000 account. Imagine you can open up to $100,000 position. That's awesome, right? That's awesome. $100,000 with just, so that is it. That's why forex is better than other investment also, right? So that's it, guys. This ability to be able to buy more even with small, that's it, guys. So that's it. So I think we have done justice to leverage. So on your broker, you just go to your broker and select the leverage you want to use. Some brokers, they give you unlimited leverage. Wow, what a broker that gives you unlimited leverage, you can easily blow your account, right? You can easily blow your account because you now start using big lot size. You will just blow your account easily. So, but just use a reasonable leverage, and then that will protect your account, because in this market, what we are fighting for first is for we to protect our capital, because it is when we are able to protect our capital, that's when we'll be able to trade the next time, right? The next trading day. If you blow up your account, your capital in one day, the next trading day you won't have anything to trade with again. So that's it, guys. Thank you very much for watching this video. So we are going to move on to the next section, which is the lags for this week. So